Let's now bring in Richard Fisher, the former president of the Dallas Fed and a CNBC contributor. It's great to have you here. I don't know if you caught Larry Lindsey's comments last hour, but he kind of hinted that the Fed had been hostile toward Trump or towards the GOP versus the Biden administration, so that there might be some history to settle here, Richard. But one way or the other, do you think the president would actually try to terminate the Fed chair before his term ends in May?
First of all, I don't think the Fed's been hostile to the administration. I mean, the one thing you don't want to have happen is for the Fed to become politicized. And by calling Jay Powell names, as the president has done, and insisting that he move, would just, if they were to do it now, it would be based on political pressure, which would undermine the sense of the independence of the Fed. I don't think it's in the president's interest to sack, even if he could, and I'm not sure he can, Chairman Powell. I think the markets, others have commented on this, and I think they're very wise in doing so, that the markets would react extremely negatively. So to me, this is just a way to take away or shove off pressure to somebody else for the consequences we've had of this tariff chaos that we have presently.
Do you think a case can be made for lowering interest rates? The market is at 3.5 rate cuts. So what's interesting about this is it's not even like there's that much of a dispute that you could lower interest rates here. It just seems to be the idea that maybe whoever the president does nominate, and this is where my mind goes, is it more about how high the deficit is, what the Fed might ultimately do or choose to do if there were no other options for bringing interest rates down and so forth?
Well, two observations. First of all, after they did the 50 basis point cut and they did the 3 cuts, interest rates went up. They did not go down. And in fact, they went up 100 basis points on the 10-year. Businesses depend on where the intermediate to longer term bond market is trading. And as you know, spreads have widened as well. So it's not clear, even if they cut, that rates will go down. Our recent experience is the opposite. And I think that needs to be borne in mind. So I'm very concerned about this. I think the president, frankly, is undermining his own case. The impact has been a lower dollar and some dysfunction a little bit, but it hasn't gotten out of hand in the credit markets. And I want to remind the viewers, forget about the stock market. The Fed will always act if the credit markets become dysfunctional and seize up. We did that in 08-09 when I was there, and they did it in 2020 and the COVID scare. So that's what you really are looking for to see whether or not there's extreme damage being done in the system. But to make cuts now, it's like any other business. No business can make a decision right here because of the uncertainty that's been generated by the executive branch.